All right, Cal. I think everybody would love to hear that. Now we're already in the last quarter of like the 2022, but the world market is seems to be facing some kind of financial meltdown. But USD has been strengthening, so that's why just now I asked you the question is like, can we just close our eyes and then short USD against the rest of the major currencies?
Okay, I think first of all you must get the fundamentals straight first. 2 years ago, when you tell people to buy US dollar, no one will buy, because we all know that there is the trade deficit. The current US debt itself is at $31 trillion, and you tell people that now they have printed like almost like $8 trillion in the market. So when you tell people to buy US dollar, people don't buy because they're scared that it will become a zero rise. Sorry to say this, in my opinion, in our lifetime, or at least my lifetime, I don't think that there's a chance of any country can supersede the US dollar. That's my opinion. Okay.
Right, yeah.
Of course, we have China, we have pound, UK pound, euro. But if you look at it from a trader standpoint of view, I cannot see it happening. All right. So to me, it's right. This time round, the US dollar have been climbing. There's a few factors here, but primary is because of the USD. The interest rate itself is climbing from 0 to 0.25% for more than 5 years, slowly escalated from that point, jumping out to the 3.75%, right? That's a big jump. And at the same time, when this is happening, global economy are all doing rather badly. China lockdown, UK having lots of problems themselves, Euro is in crumbles, Germany high inflation, Netherlands high inflation, Argentina 100% inflation. Now all these things tells you that other people are suffering. So imagine that if let's say US dollar keep on, the US Federal Reserve keep on hiking interest rate because they want to combat that inflation. So yes, the dollar will strengthen. But when that happens itself, and if other central banks are not able to do the same thing by increasing interest rate, because if they do that, their economy will really go into a spiral. So they have to live with it. And because of that, the differential gets bigger. What happened? The currency of this country will get worse, and that will push further their economy. So if you'd ask me, yes, if you had to cover two eyes to short to long the dollar and short other dollar related commodities in that currency pair, I would say that you have to be selective. Okay, but then if those are still on a downtrend, I think more or less you are pretty safe. I think there's one thing that I want to share with everyone here itself is my personal view on the US gold. I believe that gold has more downside to gold because I believe the dollar will go higher. But that will not be the same for the US crude. In fact, it's right. Recently, I also have puzzled a lot of people when I say sell gold, buy crude, because we know that both of them are US denominated commodities. But the difference is crude oil itself, we are entering winter season. Usually by default, okay, the energy usage will be there. Then of course we have Russia having a bit of issue with Ukraine still ongoing, and the Nord Stream 1 and Nord Stream 2 recently, the incredible explosion has put a bit of question mark in the map. And of course SPR, the so-called US Reserve. Now it is now at 40 over years low, and by right we all know that Democrats have this difficulty of doing that occasionally, but eventually they will still need to buy back and replenish their reserve. So if all these things is right, I kind of believe that the US crude oil will go higher while the gold goes lower. Yeah, that is how I see it. And of course, in my opinion, again, all my opinion, I believe that pound will hit parity.
Right, okay.
Yes, this is how I see it. Yes.
Yeah. Talking about the gold part, but I mean, in the past, or I'm not too sure, even current folks who are got caught with the gold price falling, but they probably had that thought that because of the Russian war, and then having crisis and all that, like gold is a safe haven that they have to so that would jerk up the gold price, so that's why they went to buy.
Yes.
But unfortunately they are caught by the other way.
Well, that is why I say trade with the boys.
Okay.
Okay. I'm not trying to sell my indicator here, but if you're right. Fundamentally, gold is a safe haven. fundamentally it's a H2, but if you put the gold chart and the Dow Jones chart side by side, or up and down, you will notice that the last 30 years they have been moving 70 to 80% in the same direction.
Oh, okay.
Which is quite contrary to what the fundamental that the boys has put up for us. So that is the reason why I say that if things are so simple, from books we can learn from certain things, then we should have a lot of rich people running around. The point is trying to express here is that, right, if you look at it, the Russian war, we had that moment when they attacked Ukraine, we did see the gold went up for a short moment of time. And we also saw crude oil went up. But what you see after that, the war is still ongoing, but both of them have came down quite a fair bit. Yeah. And recently now, the gold is still going down, but the oil is going up. So you see, it's not really following. Yes. In fact, if you put the last 6 month Dow Jones chart and gold chart, you will know that they both of them go down together at the same time.
Oh, okay.
You got my point? So it's not really equivalent, in my opinion.
Right.
Correct. That's why we need to really look at the chart instead. If the indicator call for sell, and if the fundamental call for buy, but the indicator call for sell, look at the price action. If the price action is still going down, that means the chart is speaking the truth. Yeah, that's how I see it.
Right. So when you mention pound may go into parity, that level 1:1, right? So like, I don't know, is that a question to ask, but do you have a projected time frame that when that could happen?
Oh, okay. If you'd ask me, right, I'll just give you an example. When euro was trading at one US dollar to 1.12, I already called for euro to drop to parity.
Oh, right.
That was like about a year ago, and rationale was because the same thing. Because I was very confident that ECB was not able to do the same thing what Federal Reserve will do. Hence, therefore, right, it's without a doubt that we saw the parity later on. Okay. Now, you'd ask me today, I'm not too sure the pound level right now is, but I'm quite sure within the next 4 months, we should see parity. Now, because it's a point I say the 10-year yield should hit about 4.5% by March next year.
Right. Okay. Lately, there's a huge crash of that pound, and after that it went up again with some corrections, like they're trying to sell some ETFs or so. Yeah. But would that BOE allows that pound to drop until that level of parity?
Okay. If we go back into history,
Right.
In 1992 we have the ERM whereby we saw it before that the pound basically went up, and of course we know that the legendary George Soros had done that. And the time itself, right, is the same thing. Everybody expected that it would never happen because they expected the UK central bank to save the day. But when you have so much immersed, one-sided bet on you, and it becomes too painful to keep on doing the same thing, right? There will be a point of breaking point. And I suspect that this time around it will happen. Because for BOE, they cannot really increase any more rates. So you notice that recently they increased rate on one side, but they actually printed more money on the other side. It's kind of like it's a real slap in the face, but they have no choice. So if let's say the 10-year yield or the interest rate goes to 4.5%, that will drag down everybody. And that's why you notice that recently the UN came in and said that because of every 1% increment of the US interest rate, it causes a near 0.5 reduction on the GDP of some countries, if not most countries. So it's quite reflective. Hence, therefore, alright, I believe that once we hit 4.5, we will see the the parity come in. And I'm so sorry, but I don't think this Bank of England can do much.
Oh.
I don't think so. If they were to do that, it was like digging their own grave again, and that will create problems. Yes, we will have some fights in between to prop it up, I'm quite sure. But if you look back at what happened to Euro when it was at 105 towards parity, we also saw the same thing. Whole world expected that there would no way the Euro hit parity, but there's some very volatile waves, but eventually it hit that point, right? Remember?
Right,
so it's about the same thing.
Wow, okay. Interesting insights. But do take note, folks. Then the next question, of course, is under the crypto market. There's so
Sure.
much huge corrections, and yeah, like just now I was even asking, like, is there any possibility that there's such a great correction, but not too sure is that meant to like replace fiat? So I don't know. What's your take?
Well, again, like I like to talk about history. 2 years ago, when I did my crypto talk, I was expecting the Bitcoin to go to 100,000. I don't deny this. But again, when last year, when I realized that the Bitcoin went up to 64,000, and it was simultaneous at the same time whereby the Federal Reserve have already hinted at the whole world that they are going to stop this QE, and they're going to go to QT, which is quantitative tightening. I tell my friends around me, that's it. That will be the end of the easy money. Hence, therefore, crypto will likely be one of the first few to be sacrificed first.
Oh,
Yes. Yes, I understand that there is ongoing saying that crypto is to replace fiat currency. We don't deny this. But I don't think the world is ready for crypto yet. At least from what I'm saying right now. We will need at least about 1 or 2 more years where the younger generation comes in, and then they will really, in a way, detest fiat currency, and then maybe we can accept that. But if you look at the crypto pattern, 2024 will be the next halving. And the last 3 halving we saw is pretty clear that the market will start to sell towards the halving. So if you look at it from now 2022 to 2023, I don't see crypto market recovering much. We may have to see crypto like Bitcoin going down a bit more to like 12,000. Then everybody, again as usual, freak out and say, let's cut our losses. That will be a good time, because if you're 12,000 to 64,000 again, that's a 500% return. I think that will be very substantial for a big boy to come in to play with it. And I always tell people this, big boys will only come in when the reward is lucrative. Yeah, that's how I see it.
I see. Right. So like current kind of like stagflation stage that globally we're facing, should we even have more cash on hand to wait for the opportunity to do some investing, or should we like go into more trading activities and collect even more cash? But yeah.
Okay, Ray Dalio said cash is trash. I hope that you throw
trash.
more. I hope that you throw more trash to me then. Okay, now let's just be upfront. The stock market, whether it's Dow Jones, S&P, Nasdaq, Russell, all is down by 20% to 33%. So if we talk about bear market collectively, the last 100 years, the average lows is about 37%. So which means that we are not too far away. So if you were to ask me, is cash more important now? I'll say yes. Keep the cash. Don't invest first. But once the market goes down to about 30 to 35%, and then when everyone, your neighbor, your friends, your boss, in fact, start to dump their shares, and then take out the cash from your little saving bank and start to buy some good shares. And when I say good shares, we're talking about, like example, and all the blue chips, or even technology companies has what you call useful application to the world. Yeah, things that people can really utilize it. I mean, quote it here, maybe example like Google, Amazon, or even Apple, something like that. That will be a good time to do it, but not now. Now is keep it at home, earn more cash. All right, don't even bother to trade unless you are a very good trader, but let the market slide. Let the 4.5% hits first for the interest rate, then at that time slowly take out some money and invest. Yes, that's how I see it.